Cool. We've waited long enough now. We've got, well, I kind of assumed this would happen anyway, being a Friday. We don't have as many people as we registered. We've had a lot of people register for this webinar, but nowhere near attendees to people that registered. But don't worry, we're going to start and they can watch the replay. So let's see. I'll just give it another minute, bear with me. Cool, let's get started. So welcome to the webinar. If you are new, if you attended the previous webinar last week, then welcome back. Hope that you found last week's webinar useful. What did we do? We went deep into sourcing rent-to-rent properties, from sourcing directly to landlords and how to pitch to agents so that they send you properties consistently without you having to call them. For those that don't know, my name is Kenny Sahota and I'm the founder and CEO of the Amelia Group, and I'd like to warmly welcome you to this exciting webinar, in fact the webinar series about rent-to-rent property strategy. A little reminder about me: I operate 3 property businesses, niching the majority in HMOs. We have over 330 units. 220 of those are rent-to-rent HMOs, and our main business is now commercial to residential property. For those that didn't get to watch the last webinar, it's available to watch on replay. The webinar link should have been sent out to your email, so just be sure to check your spam folder or your junk folder just in case. Alternatively, you can find the video on our YouTube channel. Just simply search Amelia Property London on YouTube. Just quickly, if you can't hear me, just make yourself known in the chat facility. I don't think you should have any issues though. And we have more people coming in, bear with me. If you can't hear me, just make yourself known in the chat facility. So firstly, thank you and congratulations for those that have joined in this webinar, especially on a Friday night. And for those of you that have come on for the second or even the third time, it just really goes to show that you've taken a real keen interest in looking to take this up as a career or better step towards better improving your lifestyle. As I said in the last webinar, to those that really want to take this up, don't wait, just do it. You've got all of the resources around you to guide you and not to make the same mistakes I made over 11 years ago. The fact is, it's easier than ever before as more and more letting agents are open to the idea. So if you really, really want to take this up, get in touch with me. In fact, just like last week's webinar, I've opened up a few slots for free strategy calls. It is December and quiet for me, so I'm really, really keen to get to know each one of you on a more one-to-one level and help excuse me, and help you decide what to do and open to answer any questions you have. At the end of the webinar, you'll have the opportunity to schedule the call with me, and don't worry, the webinar is obviously recorded and will be sent to you, so you can watch it as many times as you want. So since the last webinar, I've had some very interesting calls with people that were watching, and I'm amazed to hear so many people taking action as a result of the call with me. So some of them of whom have become mentees now of ours, and they've kind of some of them have joined our mentorship program, which is great. And I can tell you those mentees will get results straight away. We don't have it any other way apart from getting you to increase your cash flow and growing your business. So let's do this. As can be seen from the title of this slide, the webinar will be related to compliance and preparing your rent-to-rent property. It's the next logical step in the whole end-to-end journey, and that's what this whole webinar series is structured around. So in the previous webinar, I would have touched base on this blueprint. This is a framework I've created to illustrate how I operate my businesses and how I've done so in the past 11 years. So this framework has 3 main components. Each component is like a machine. For those of you revisiting this webinar, you would have seen this before. You have the sales machine, where you're in constant flow, where you have a constant flow of new business coming in. The next is your systems machine, or your day-to-day management machine, focusing on the delivery of your service or products. And finally, you have your scalability machine, where you focus on monitoring and analyzing key data in your business that allows you to grow and flourish your business, and even discuss exit options. And in this webinar today, we're going to cover the systems component of this framework. So here's the agenda for today's webinar. I'll do my best to keep this to 1 hour, so that I mean we're already quite far into we're kind of running behind. So I'll whiz through it, but in terms of the content, you'll get everything, and of course, so that you can do your normal evening Friday duties. First, we'll talk about negotiation and closing the deal. You'll learn what leverage you can have available to you during a negotiation, and we'll talk about the key points needed before you close on a deal. We'll then go into some important learnings around documentation, legal requirements, and mostly compliance, so that you know you do things the correct way. Next is very crucial, is preparing your property so that you attract the right type of tenants. If it's a HMO or if it's a service accommodation, then ensuring you always get bookings. We'll then move on to cover aspects of tenant finding and how to filter out the bad tenants, and then also have the opportunity to get your questions answered, of course, with a live Q&A. So lots of content. So get your notepad ready, because you will need it. So let's crack on. Let's start with negotiation and closing the deal. So why is this so important? It's the difference between making a deal or breaking a deal. You want to have that control in your hands and only proceed based on an informed decision that all of your checklist has been ticked off. This list gives you the go or no go on whether a property is worth taking on or not and closing. It's also the difference between being a high risk property or a low risk property. Business is all about mitigating risks or minimizing them so that you can focus more on those high return tasks or what we call big ticket items. All in all, it results in you receiving a high return on your investments, which is, of course, what business is all about at the end of the day. So before you close the deal, you need to ask yourself, would you live there? If not, what work needs to be done and how much will it cost? Once you've done that, reanalyze the numbers based on this. For your information, our mentees receive a deal analyzer tool that allows them to plug in the numbers and it pops out with how much profit they make. It's a fantastic tool and makes life so much easier without any complications to the process. What you then want to do is check whether the forecasted profit falls above your minimum threshold. Speaking of thresholds, you want to ensure that you don't take properties that fall below this particular threshold. The threshold should be set based on your risk management. For example, if you have a property that's operating as a HMO, then maybe have £500 net profit per month as a minimum. Anything below this, just reject it and walk away. It's the difference in operating a profitable property versus one that costs you money. Lastly, can you make it a win-win for you, the landlord, or even the agent if an agent's involved? If so, great, close the deal. So next, I'd like to talk about some variables that you could potentially use to negotiate with that you can leverage on. So it's really, really key to help negotiations. So here we go. So can you negotiate on the rent amount if you offer to contribute to some sort of refurb or light refresh? Is furniture provided or not? Depending on the condition of the furniture, it may actually give you a high return on investment if it's provided, saving you on the furniture outlay initially. So it's always good to try and get furniture included. So deposits, can you avoid paying this by saying that you'll be taking deposits from tenants? I know we're very good at doing this in our company and generally don't pay deposits anymore. In fact, we took on a rent-to-rent HMO 2 days ago, Wednesday actually. Well, that's when it started, but we knew this was in a pipeline for a while, and that was a property that we didn't pay any deposit for. It's fantastic because it means we are almost doing no money down deals, right? If you're not paying for a deposit and I'll talk about delaying start dates later in anyway, but if you can fill a property in before your start date, you're collecting money and then passing it on, basically. Actually, speaking of which, that's the next point. So speaking of no money down deals, if you can delay the start date, you can get tenants in before or by the start date, collect their rent, and then use that to pay the landlord's share. So I generally don't like to talk about no money down deals, since the term is kind of abused incorrectly by other property education companies to really entice you to sign up with them. I just want to let you know that it is possible. We're able to do this after having a track record of building great credibility with our customers. So FYI, it took us a while to do it, but we can do it now. And I guess it takes time to show that credibility, but it can be done and it's worth trying. The other point is, can you cover a light refurb or consult on the end product to increase the rates? So these are things that you can leverage on as part of your negotiation with the landlord. So I'll give you some key takeaways regarding negotiation and closing. at the end of the day, you're only dealing with other humans. Those humans or other people can be convinced by providing a win-win solution. And that really is the secret formula to becoming a sales machine. It's not complicated. All you need to do is provide a solution to a problem that doesn't cause any headache to the client. That coupled with a little bit of charm, and you have the winning formula to becoming a sales machine and are able to negotiate and close many, many deals. Keep your risk in mind by ensuring you run the numbers by worst case scenario. So what I mean by that is when calculating the profit, ensure that you take the worst case scenario room rates. That way, there are no surprises in future. So that's negotiation and closing. There isn't much to it, but it's kind of, I wanted this to be part of this webinar because we didn't have time last webinar to cover this, but essentially, we're at the stage where we've just sourced a property and we're at the part of negotiating and closing it. So that's now done, and I just wanted to spend a few minutes on this webinar to cover that off. But what the reason why we're really here is because of this. So let's move on to documentation, legal requirements, and the compliance section. Now, these are just high-level points. Talking about each of these in detail, and not only that, but providing you every single thing you need to know isn't something that I can do in the 30 odd minutes that we have left. So we do provide mentorship, guys. So if you are serious in taking this up and want to learn how to do this in the right way, not only that, but also want to fast track to your first deal in the most simplest way without you having to worry about compliance, then book a call with me when I send you the link later, and we can discuss how we can work together. So why is all of this legal stuff important? Well, most importantly, it protects you from fines. I know an agent, and he's a good friend of mine who runs an agent quite locally. And he got fined by the council for simply not displaying their fees on their website. The fine was something silly like £5,000. The fines are serious, guys. So it's better doing it right from the start. It will also protect you from tenants that don't pay you. Don't get me wrong, the odd one or two may slip through, but the point of this webinar is to provide you with a systems machine that covers your day-to-day operations. It will also protect you from legal issues and bad PR. PR being press release. The last thing you want is someone publicly calling you out on the social media channels. I know they say any PR is good PR, but trust me, you do not want to have someone slating your business on Twitter or something. It doesn't make yourself look good. It will also protect you from a safety perspective. You want to ensure you cover your landlords so they know their properties are in safe hands, but also your end consumer who are also your tenants. You have the duty and responsibility to protect them in the same way when you stay in a hotel, and they have the duty to do the same while you sleep comfortably in their rooms. Take, for example, the recent fires caused in those multi-story buildings like Greenfield Towers, and the number of deaths. You really don't want that on your hands, so better to do things properly from the start. And of course, that will give your tenants assurance that they are living in a safe environment. So that's what we're going to cover in this section. Some of you might find it boring, but this is things that you do need to do when running a rent-to-rent business or even a property business. A lot of this stuff you can apply. In fact, all of this stuff you can apply to any property business. So let's talk about some requirements. And this is mostly to do with HMOs, but you can apply this to whatever your operating model is. And we discussed operating model in the very first webinar. So the first thing you want to do is check that you aren't in an Article 4 directive area. I won't go into detail on what that is, as we've covered that in a previous webinar. If you want to know, then just watch the previous webinars. What you want to do is then memorize the licensing rules and factor these into your sourcing. So when you're sourcing property, all councils and boroughs are very, very techie savvy now, and every single information about licensing you can find on their website now. So just to add to that, licensing rules, what I'm specifically talking about here is minimum room size requirements, minimum kitchen size requirements. Know all of their rules. You want to know these rules inside out. Speak to a fire consultant and get risk assessments done. They will tell you exactly what you need to have in your property. They will base their work on what's called the Le Corps fire standard. In fact, you can read up on this and it will tell you exactly what you need to have for the type of property you need. It's also handy when the council tell you to do something extra that the Le Corps standard illustrates not to do, in which case you can then just refer to the Le Corps document and prove them wrong. It works every time for us in the past. We've had arguments with councils. Councils say, no, you need a grade A fire alarm system, and the Le Corps standard would say, no, grade D is fine, and that saves us like an extra £1,500. So it's really, really key to know exactly what you're doing. You need to ensure you have filed important documents like certificates collected from the landlord or agent. You need to have a gas certificate, an electrical certificate. Obviously, those certificates are provided once an inspection is done by a certified gas engineer or a certified electrician. An EPC, which stands for Energy Performance Certificate, and you obviously need to apply for a HMO license if you're operating a HMO. I get a lot of questions about this. Ensure the landlord's mortgage is not impacted by your intention. It's always handy to have a great mortgage broker that you can share with your clients to help find a solution. Now, my mentees get access to my broker who has over 30 years experience and is well known by most big developers. A mortgage broker can find, say if you still have a property and that landlord has a mortgage that doesn't allow you to do a HMO, what you can do is get that mortgage product onto a HMO product without it costing anything more. And a good broker will be able to do that. So don't get me wrong, HMO mortgages generally are more expensive, but there are some good products out there. This is why it's so key to have a great mortgage broker. Ensure buildings insurance is in place and collect the details of those. The idea is to provide a stress-free experience, and in the event of an issue, you can claim on behalf of the landlord. Ensure that it covers things like break-ins and damage caused by those break-ins. We've had a story in the past where we had a property and it got burgled and they completely broke the door frames and window frames. So we had to claim an insurance. Luckily, it covered it, but it was a lesson. It was an awareness. It opened our eyes to ensure that all of our other properties have the same cover. You also want to properly collect and file the landlord and property information for management purposes. I actually haven't put that down as a point, but file the landlord's property information and the landlord's details correctly. We'll talk about what systems you can have in place for that. So lastly, ensure the contracts are legal and does allow you to let out as rooms or whatever your operation is under. Ideally, a management agreement. If you are using an agent, it's likely that they will want you to use their documents and probably sign a corporate let agreement. I would personally suggest you get them to sign a license agreement where you have the ability to add or remove clauses that allows you to operate your model. So I would go for either a management agreement or a license agreement. So far, we've spoken about compliance around the property. However, what about compliance around you as a management company? What do you need to have as a minimum requirement so that you're doing your legal obligations as a property management company? So the letting industry or property management industry is currently not regulated. There are talks about making it regulated, i.e. for staff to undertake training and qualifications before becoming a regulated company. However, it's just in talks at the moment. In the meantime, you do need to be registered with one of the consumer redress schemes. There are two main ones. One's called the PRS, which stands for the Property Redress Scheme. One that you might have heard of. Then you have the Property Ombudsman Company. We're registered with the PRS in my company. There's no preference. You can go with either one, but I do think PRS might be the cheaper one, actually. The next thing you need to do is ensure you protect tenant deposits. Now, apologies if some of this stuff is simple. This webinar is catered for beginners as well as non-beginners. So don't worry, we'll make sure we cover the basics as well. But yeah, make sure you protect tenant deposits. You can do this by registering an account with one of the government deposit schemes out there. And whenever you collect a deposit, it needs to be submitted to the relevant scheme. CMP, client money protection. So with this, you need to have two separate bank accounts. One account is a pooled client account where you can collect all rents from your tenants. You can't have any business expenses, and at the end of every month, your closing balance should be zero for this particular account. The other account is your normal business account, otherwise referred to as your office account. This is where you pay your business the remaining after paying the landlord's rent from the client account. And there is a legal requirement to have CMP in place, client money protection. If you register for the PRS mentioned earlier, they also offer client money protection too. It's just a simple insurance policy that covers the landlord's rental money, basically, rent. Another thing you need to know is you cannot charge tenant admin fees anymore. In fact, you can no longer charge the tenant anything, apart from maybe late payment fees or key replacement fees. Finally, you need to be registered with the ICO, which stands for Information Commissioner's Office. It's to do with GDPR and data protection. It's about £30 a year, but all businesses that handle data need to be registered with an ICO. It is what it is. It came into force, I think, last year. Was that last year? Or was it this year? It was either April this year or April last year. I'm quite sure it was last year. So that's compliance, guys. I tried to not overcomplicate it, but there are plenty more to learn about this. So please don't hesitate to ask questions at the end of the end, or schedule a call with me, or even request to join our mentorship program. We don't take on everyone, but call anyway, and we'll see if we are a good fit for each other. All right, just have to take a sip of water there. So now that you've got yourself a rent-to-rent property, you now want to prepare your property. So specifically, let's take HMO as an example. Bear with me. What is the PRS role? I'll tell you what, Amalan, if you can just save that question, and I'll answer that question at the end. So let's look at a few steps that you can do to prepare your HMO. Staging and dressing. Ensure your property has been staged. What do I mean by this? What I mean is that you need to furnish your property if not already provided, and ensure all white goods are set up. For example, your fridge is in place, your kettle, your toaster, your washing machine, etc. And also dress the furniture. When you book a hotel, when going on holiday, notice how the pictures show a nice hotel. So the pictures on the adverts on say bookings.com, notice how it shows a nice hotel room with bed sheets and lovely pillows, and even how great the color contrasts in the rooms are. You know, you usually have wall art up and on the walls. You want to apply the same so that when you have tenant viewings, they already feel at home. This reduces your void periods by days and weeks, right? You can get tenants in very, very, very quickly if you stage and dress your rooms. Compliance, you want to ensure you file your documents and certificates in an organized manner with hard folders or even soft folders, and upload them to the cloud. But, you know, for example, you want to have a folder per property. So yeah, that's the filing. Sorry, I should have pressed the button. So it's that's the filing part. Also, you want to do all of the safety works I mentioned earlier. For example, the fire systems, fire doors, gas and electric inspections. I won't go into detail, but all of this stuff is mentioned in the core standard. All of our properties have notice boards that display all the legal documents and procedures. In the event of an emergency, for example, the tenants can refer to the notice board on exactly what they need to do. It's very, very important. It will also show the HMO officer from the council that you mean business. They get a good idea about the type of operation you're running, good or bad. And of course, first impressions are everything. Provide welcome packs to your tenants. It's quite straightforward. Get these ready when preparing your rent-to-rent property so that you can have these ready for when tenants move in. And also have a system in place so that you can set up all of the details of the property on this system. We have a system called Jupix, Jupix. It's great, but covers a lot of estate and letting agency features since we operate an agency anyway. You may even want to start off with a simple Excel spreadsheet that records this information, so all of your information is all in one place. You can't go wrong with Excel. It's cheap, it's easy to use, and you can do anything you want with it, really. The best thing about it is when you scale up your business, which is what we'll talk about next webinar, you could just simply transfer the data to any software relatively easy if it's in an Excel format. So that's what you need to do to prepare your HMO. It may seem overwhelming, but like I said, we do offer mentorship, and we make this process so much more simpler so that all you do is mainly focus on growing your business. All of this stuff is provided to you. So here are some key takeaways around compliance. Being compliant allows you to sleep at night. It means you are doing things the correct way and won't have anyone chasing after you for fines or reasons to sue you. So Being organized with your compliance allows you to scale by repeating process and procedures because you have the foundations and control set in place. Our mentees have access to our power teams for knowledge share, and all forms and welcome pack templates are provided. So the idea is to take the stress out of building your rent-to-rent business. So again, if you are interested, please book a call with me at the end of this webinar. So let's move on to the type of tenants that you can have. There are generally 3 tenant groups. You can see all of them on the slide. One are your students. You can have professionals or key workers. Key workers being your police officers, ambulance staff, firefighters, etc. Very, very good tenants to have. Or you can have tenants from the council. This comes with its challenges. So my recommendation is what we do in our business, which is to focus on just professionals and key workers. What I would say is always have the same group of people in the same properties. Mixing between these 3 groups in one property might be a disaster and provide a clash of personalities. Okay. So how do you find these tenants? So let's go through some steps. It's worth mentioning that when you take pictures for your adverts, please always use a professional camera, ideally one with a wide angle lens. It makes a huge difference. Do not use your phone unless, saying that, there's for example, the new Samsung phone, Galaxy S10, I think it is. I think that has a wide angle lens on it. I've not tested it. Apparently it's great, but you can't go wrong with your professional SLR cameras. Next, get your ad copy to stand out, but really describe the rooms, housemates, and the perks of using your property. It will make your ad stand out from the rest. The next thing to do is to get your ad copy, these photos and your ad copy onto various sites. The main site for rooms people use is sparerooms.com. It's no secret. You generally wouldn't use any other sites, as by now your property would be in a great location with high demand. Last webinar we spoke about gold mine area, and we ticked those boxes. If you've got property in an area that's got high demand, that coupled with a great ad copy and pictures will have lots of tenants booking viewings with you. You can also utilize social media. More and more people are starting to use Facebook Marketplace. Having a Facebook page is also a great way of building a community of house sharers, and that's also building credibility with agents. You can be known as the person that provides a community of house sharers. It all plays a contributing part towards the success of your business. You can also utilize other letting agents. In fact, we outsource our tenant finding to an agent who does it really, really well. It saves us the time of doing the viewings and the advertising. It's totally worth it. That's just a decision we've made. We've actually trained this agent and taught them how to correctly find tenants that we want. You can also use your existing tenant database. Obviously, if you've got no properties, then it obviously doesn't apply. But assuming that you have 1 or 2 or 3, that's like 5 or 6 rooms per property, or in 7 rooms. So you've got potentially 28 people. that you can ask to see if there's any friends or family that they'd want to live with them. And saying that, what's better than having a tenant have their friends live with them? It will create really good synergy. How are we doing with time? Okay, so time is pressing on. I got quite a bit more to go through, so let's just crack on. Tenants onboarding, right? So let's talk about tenants onboarding. So once you get responses from these adverts, ensure you book the viewings ASAP. Never leave it more than 1 or 2 days in advance. It's because it's likely the tenants would already have other viewings, and if they see a room they like before they see yours, it's likely they will take that and probably even forget to call you out of courtesy to cancel the viewing in advance. At that viewing, you want to ensure you get some sort of commitment from the tenant to reserve the room. Now that the tenant has reserved the room, you can now begin vetting. In fact, your vetting should start from the first point of communication with that potential tenant. Always trust your gut. If you get a bad feeling about a tenant, you're probably right. So what does that include? You want to get an employer reference to confirm they have a job and confirm their salary and the contract duration. You'd want someone that's in a permanent job, ideally. You want to get a credit check done. There are companies that can provide these services. Just find them on Google. There's Experian, there's Credit Check, there's landlordreferencing.co.uk, and it will cost something like £6. It's nothing. Always ask for previous landlord reference if it applies, of course. They may not have rented in the past. If they did, then great. Ask for the previous landlord's details. Lastly, ask for the last 3 months' payslips and bank statements to ensure they can afford to pay the rent every single month. So this helps filter the good tenants from the bad tenants. And don't get me wrong, some do slip through. But at least you can physically, on paper, check whether someone can financially support paying the rent and support themselves. So let's go for some key takeaway points. Doing what I've mentioned so far is the difference in profit or costing you money. If you've correctly vetted a tenant, you know you will get paid. If you get a tenant that hasn't been vetted correctly and can't afford to pay, you'll be out of pocket. Our mentees on our mentorship program receive ad copies that are proven to work because we use them in our own business. We do provide a full checklist and systems taking the thinking out of what you're doing. And we also show how to dress a property for less than £100. You can do that. So all we want to do is just make our mentorship program completely hassle-free. That's the idea of it. If you've watched our previous webinars, you'd probably recognize this framework by now. So far, we've covered the sales machine aspect and part of the systems machine. There is more to the systems part. So what we'll do is include this in the next and final webinar next week, actually. So there's more to this systems. I was conscious of time because we ran over last webinar by, I think, an hour. And there was a lot of questions. So what I want to do is wrap this up now so that we have more time for questions, and anything that we haven't discussed around systems we'll discuss in the next webinar, because there's so much more to talk about. We've got to talk about property management yet and how to deal with that. And we'll tie that into scaling. Next week, we'll also cover, like I said, the scaling machine of the business, specifically how you go from 1 or 2 or even 5 rent-to-rent properties to 20 plus or over, and have a business that brings in over 7 figures a year, which is exactly what we're doing, and allows your business to become very, very attractive to investors. It's my favorite part of any business and the real reason why we go into business. Of course, everyone is in it for the reward. So very exciting. Yeah. So you guys would have seen this on previous webinars before. If you're new, the idea is to book a call with me. Some of you I may have spoken to already in this webinar. I can see some people that have been here before. There's some of you that are new. If you are thinking of applying this strategy to your current situation or have any questions, just give me a call. I've freed up some time. I'm going to send a link to you guys. Bear with me. I'll put it in the chat facility. If you still want to chat to me and spoken to me before, don't worry. I'll be happy to speak to you again. Always open to providing answers to your questions. So in the chat facility, I can see there's already a few questions from people. Click on the link now to book a call. I'll leave you guys to do that. And while you guys do that, let me open the floor to Q&A. Let's see what we've got here. So Amalan, you said, what is the PRS role? In all honesty, the cheeky answer is to take your money. The correct answer is what they do is ensure that the person that's managing the property is fit and proper. It does filter out those, those scum landlords, basically, or slum landlords even. Do they do any inspection? No, they don't. So this is when you register your business as a property management company, or even someone that has property to rent out. If you're managing property yourself, even if it's your own property, you do need to be registered with the PRS. And yeah, it's for them to. To be fair, the only time they'd be involved during your property journey is if a tenant or landlord has a complaint about you as a business. You're meant to have a correct complaints procedure, and if you can't get a satisfactory agreement between you and your client, they then have the ability to escalate to this scheme. Basically, it's like if you have a problem with a bank, you can escalate to the FCA, or I think the travel industry has their own, but I forgot what it's called, but you can escalate to them. Double glazing, for example, they have something called Fenza or something like that. Yeah, don't worry, guys. There will be a replay. This is all being recorded, so don't worry. It was a short webinar, but I purposely did it because, because we went over the questions last time, and it's Friday, so I don't want to keep everyone. And this weekend is actually our. We've got a new set of mentees coming in for the implementation weekend. So that starts tomorrow and Sunday. So I also wanted to finish earlier so that I could prepare for all of that. No rest for me this weekend. Interesting. So I have a question here. Good question, Adam. About registering a company, what business activity do we put when registering? Do you put property management company or just put property business? Keeping in mind that we could change our business strategy anytime, for example, switching from rent to rent development. I would say keep it as generic as possible. If you want to do multiple things, just keep it as real estate or property investment or property, well, maybe not property investment, property development. If that's your end goal, just do that. Or you can, I'm not sure whether you have options that you can only choose or whether you can just put down exactly, but I'm quite sure, it's as generic as real estate. So I would just put real estate. Do you have any cost estimation and their breakup about setting up HMOs? I heard that meeting compliance with fire door and fire alarms, etc., are very costly. Yes, so I can tell you this now. So fire doors are roughly, I know someone that could do fire doors for £40, but that's buying in bulk. Generally, they're around £80 per door. Fire door and fire alarm, sorry, you're looking at, I've got a guy that does it for £1,500 for a grade A fire alarm system. In terms of locks on each door, basically, I would say you need to, your total setup cost will be £5,000 altogether if you're operating in London. Around 2,000 odd of that will be towards the rent and deposit, probably 2.5, call it 3K. And then what you do is you spend 2,000 on basically compliance and dressing up. If you are refurbishing, obviously, then that's an additional cost. And ideally, you want to try and negotiate on whether you take on refurbishment or the landlord does, or whether you contribute equally. But obviously, it's all about return on investment. So you want to make sure that there's enough profit every month to be able to cover all of that, get your money back. Good questions. Anyone on this call want to book a call with me? Just ensure you do it now. Do we absolutely need to register a company to be able to do this rent to rent business? Yes, you do. I'll tell you why. When you're approaching agents or landlords, if you approach them with just you as a person, do you think they'd want to work with you? If you approach them as someone that works for a company and that company has credibility in their eyes, because that's something you can do, you can position yourself as a credible company. You do that by registering a company. Secondly, when you're taking in rent, when you're collecting rents, you want to collect it via a business account. So you'd have two accounts, a client account and a business account. I mentioned that earlier, Adam. So if you just watch the replay, you'll get what I mean by that. But essentially, you have two accounts. One account handles client money, and the other account is your business account. And all tenants pay this client account, and then what you do from that client account is then pay the landlord from there, and the rest is transferred to your office account. And what's going to happen is you're going to have various utility bills to pay, and you want to register your business for those bills, not on your name personally. And then what you want to do is whatever your profit you've left, you're then liable to pay tax. And if you register a company, all you have to do is pay 17% tax. Whereas if you're doing it personally yourself and then have to submit your income to HMRC as self-assessment, then you have to pay 40% tax. So which one would you rather do? Is there any credit checks done for the new business? If so, is it likely to fail at the beginning? What to do for this? Good question. And just for everybody, just to explain further what Amlan means by that. So when you register a business, it's going to be completely new and you won't have any history of accounts. And when you source property via agents, those agents will, once you take on a property, once you offer on a property, the next logical step in the journey is that the agent will reference you as a company. And if you've got no accounts to show, then what they will do is they'll either ask for a guarantor. And if you currently work and have a salary, what you can do is you can be the guarantor of your company personally. So that's what you would do, Emily. So if you've got a brand new business with no accounts, actually there's two things you can do. One, you can be the guarantor of your company personally, or two is get yourself an accountant, build a very good relationship with them, and get them to send you provide an accountant reference. So agents do accept accountants reference letters, and if that accountant's reference letter says you're forecasted to make 70k or 80k this year, which you can ask them to do off the record, well, not off the record, it's bad, don't do that. But let's just say you can get your accountant to give you a accountant reference letter, and if they know that your accounts is forecasted to make a certain amount, then that's something they can provide to your agent, and then it's up to the agent to accept it or decline it. Otherwise, alternatively, just become the guarantor personally of your own company. Hope that makes sense. Yeah, all of my mentees on our mentorship programs have access to all of my power teams. It's even better when you're London based because you get even my builders, my architects, if you need them, my broker, happy to share my broker. And the best thing about it is the more I share these contacts, the cheaper they get. So it's all in the best interest of everybody. It's not about competition or anything like that. I think those that see this as competition are blinded by it. The more people that you help, then you're actually helping yourself. Economies of scale, they call it. Any other questions, guys? Doing well on time for the first time in out of all the webinars so far. This is so far on time, so getting better at it. What's the perfect property for rent to rent? Describe the perfect one. I'll tell you exactly what the perfect property is for rent to rent. Definitely a HMO. I don't do service accommodation because my foundations of my business and the systems are very much catered to HMOs. It's what we're good at, and it's very niche. And when I speak to an agent, I can tell them exactly our story and what we're about and what we do. If I say we do HMOs and service accommodation, it's just too wishy-washy. It's too much. We're very niche, and we have one story to tell an agent, and the agent loves it. So speaking of HMOs, the best property would be a HMO, ideally something that's like a 6 or 7 bedroom. Obviously, the more bedrooms, the better. It means more profit. But 7 bedrooms, and if you're looking at 7 bedrooms, it needs to have every room as ensuite. So no shared bathrooms, 7 rooms, all ensuite, a nice large kitchen with communal area. Although communal areas aren't used, we've proven that out of our units. and nobody just uses the communal area. So not for 7 rooms anyway. But yeah, 7-bed ensuite with a good sized kitchen, and ideally with kitchenettes provided in each room. And what I mean by kitchenette is a simple worktop, 1.5 meters, with units top and bottom, and a mini fridge in each room with a sink. Something like that in our area, a room rate will be roughly around £800 to £850. Yeah, living area for 7 bedrooms. I mean, there's a council requirement in my area they operate that says that if you've got 7+ people, you need at least 25 square meters of combined common space anyway. So a living area can be a large kitchen, so you can split a kitchen into a kitchen and a diner. So it does count as a communal area. But the perfect property would have it, but I can tell you that tenants don't use it. I don't know what it is. Everyone just keeps themselves to themselves. But this is where, with our co-living projects that we've got going on, the larger properties that we're doing. So we've got one that we're doing where it's 40 bedrooms and 200 rooms. Those will have, the 200 rooms one's going to be really impressive. We'll have like a snooker room, pool room, a separate utility room for laundry. That's the sort of community that one provide. HMO licensing fee also to be included in the 5K setup costs. Yes. So what we do is in our area, if a landlord needs to let out a property, they need to license their property anyway, regardless if it's a HMO. So what we do is, if the fee for our license fees in our area is about £1,000, but the fee for the other the normal standard license is roughly around £500, £600. So what we do is we cover the difference. So we only pay half of the amount. But yeah, it's included in the 5K. If it goes over, we always say 5K is a rough setup cost, but occasionally it can go over. 40 bedrooms, are you building that from the ground? It's actually a commercial to residential. It's a factory that we're turning into residential. The 200 rooms is ground up. When's the next webinar? The next webinar, it will likely be next Thursday. Links will be sent out on Monday, along with the replay link for this webinar. 1,000 per property or by room. What was that regarding? 1,000 per property or by room? Per property, yeah, per property. HMO fees are the HMO fee is per property. You need to apply for a license per property. You can't have a license that covers all of your properties. Even if you apply for a license, and then even if it's a property that you own, if you own that property, you need to apply for a license. If you take on a property that you've just purchased, not rent to rent, let's just say it's a HMO that you've just purchased, and it already had a HMO license, you still need to apply for a new HMO license under your own name. That you can't transfer licenses over. Which department in the council work for HMO? They usually have 2 departments. One's called the planning department, which handles planning applications, and then there's the licensing, the property licensing department. So they're 2 separate departments. I mentioned planning because in our area, as of today, the 6th of December, Redbridge, that is, Redbridge now require planning permission for you to turn a property into a HMO. It's an Article 4 area, basically, as of today. So we spent the team spent yesterday just submitting our final planning applications before the 6th, which was fun and games. In fact, the council's website crashed and we weren't able to make payments. And this was actually past 5 o'clock, so or approaching 5 o'clock, so we had to get on the phone to the council and just get them paid manually through the phone. Made it on time though. Any other questions, guys? Have I missed any questions? Looking through them, I don't think I have. Adam, you mentioned last week that you were going to book a call with us. Book a call with us. I'd like to speak to you. I like how, I mean, most of the questions generally come from you guys anyway. So it'd be nice to speak to you. So if you can, Adam, book a call. If there's any issues with scheduling, just drop me a message directly, email me, or find me on Instagram and just message me on there. It'd be nice to speak to you. Cool. Any other questions? Awesome. This is exactly why I wanted to spread the webinar over to the next one. I have lots more to talk about, but in terms of these slides, I always follow the slides. So I've purposely created less slides this time. So more content next webinar. Specifically, I want to be talking about what I wanted to speak about today was property management. Because we've spoken about negotiating, closing the deal, compliance documents, preparing your HMO. So now that you've prepared your HMO and found tenants, what then happens next? The next thing is then managing your tenants and managing your business. So that's what we'll talk about later. Next Thursday. And then we'll talk about how to go from 1 or 2 properties to 20 plus properties and how you do that. No worries, fine. If you can't attend next week, don't worry. The recording will be available. Cool. I will stop it there then, and just look out for your emails on Monday. How many webinars will we have? So next webinar is the last and final webinar, especially for this year. I have a pre-recorded webinar. It's high level in terms of covering everything, but these webinars are more detailed. But if you still want to learn more, I'd really urge you to take up our mentorship, because that's really, if you can't, based on the information that you've received from me during these webinars, you should have enough information to then be able to do this yourself. And you know, I think there's no wrong time of doing it. I think the right time to do it is now. You know, don't wait, don't procrastinate. Just get on with it. If you need guidance, then like I said, just give me a call and get on our mentorship program. We don't take on many. I'm actually closing the window very shortly because I'm really excited to be focusing on our property developments. But we've got a good community of mentees now who are doing quite well. And what we want to do is just get them involved in our projects that we're doing as investors who will get quite a healthy return. So I'm not allowed to discuss the returns on a public place like this. FCA rules say I can't. So, oh yeah, go for it. Another question. Why do I prefer rent to rent over service accommodation? Do you mean HMOs over service accommodation? Quite simply because I feel uneasy about relying on occupancy rates on a nightly basis. With HMO, if I get a tenant in, I know that tenant's going to pay for the next 6 months at the minimum. With service accommodation, I just feel uneasy about having someone trashing a room. I'm just I'm just applying it to myself. Whenever I book villas or apartments in other countries, I don't really particularly look after the room. And if I know I won't do that, then I'm not happy with anyone else doing that with my rooms. Speaking of which, we are looking to do a service accommodation in January for one particular property, a new one, but I'm only trying it. But even still, I need that assurance, and I didn't go into service accommodation because I went straight into developments, and developments, the return is so much more than service accommodation. So that's the reason why I didn't pursue service accommodation and scale it. Hope that answered your question. Summarize, basically, it's the security around HMOs and the return I'm getting on the next stage of my property journey, which is property developments. Yeah, so developments. So Adam said development would be to take commercial building and turn them into residential. That's essentially what I'm doing. Yes. So developments could be taking any property, adding value to it, and then maybe selling it or keeping it and refinancing it. The whole concept of development is where you're adding value to something. And what we do is we take commercial property and turn them into residential, either apartments or large HMOs. And uh, in terms of size, we generally go for somewhere between 7 to 12 apartments, or if it's rooms, then somewhere between ideally 40 to 60, but we've had an opportunity where there's possibility of 200 rooms, but that's planning. It's a large planning application, and it's taken ages. So that's where we are with that. But before you do the developments, the thing is with developments, our developments are taking at least 15 to 18 months before we see any money. So it means there's no cash flow for 18 months. So you need to have something in place to cover your cash flow. And that's where rent to rent is great. Yeah, but it is a long time to wait, but the returns we're talking mostly six figures and seven figures. So at the end of 18 months, when you take your profit, you're looking at 800 to 900,000, and when you've got three or four of them on the go, it's quite lucrative. So any other questions? Cool. All right. I will stop the webinar there. Thank you all for taking out your time on a Friday. Not ideal to be doing it on a Friday, of course, but thank you. Thank you for joining. It just goes to show that you're keen and taking that time to grow yourself and personal development. So until let's speak next Thursday. Join the webinar. Look out for your emails on Monday, and have a good weekend all. Speak soon.